Hello and welcome to Gold and Silver Assets. It's Sunday the 7th of November 2021. So today let's talk about paper gold. This is something that's been increasingly popular amongst investors, particularly in the last 15 years. And there are some that believe that paper gold won't actually survive and it will soon be a thing of the past. So some people have asked me for my opinion on this. So I'll give you my take here, but before I do, I must tell you that I have no professional experience whatsoever in banking or commodities industries, so do bear that in mind. Paper gold is a financial instrument that reflects the price of gold, but it's not in itself physical gold. Examples of paper gold include futures, options, CFDs, and there are some ETFs that aren't backed by gold, so they can also be considered paper gold. There are three major centres in the global gold market. London is, of course, the historical centre of gold trading and sets the twice-daily LBMA gold price. Interestingly, London has been losing its share of the global gold trading volumes. Comex is based in USA and that's operated by the CME group. And then in Shanghai, gold is traded on the Shanghai Futures Exchange and also the Shanghai Gold Exchange, which is actually the largest purely physical spot exchange in the world. On the Shanghai Futures Exchange, only institutions can ask for delivery of physical gold. Whereas on the Shanghai Gold Exchange, anyone, including individual retail investors, can take delivery. These centres are the primary venues for gold trading, and secondary venues such as Dubai, Japan, Hong Kong, they tend to have much lower liquidity. I came across this chart which I thought was quite interesting. The trading volume of gold is in fact second only to that of the S&P 500. So this is gold over here. This is the S&P 500. And if you look down here, you've got things like US corporate bonds over here and US treasuries, 1 to 3 year treasuries are down here. So yeah, I didn't realise it was that heavily traded in terms of volume there. Let's look more closely at each trading centre. So this chart covers 1997 to 2018. And it's actually the light blue bars here that we want to look at here. Those show how the futures and options exchange trading volumes have increased from down here in 1997. It's gone up tenfold over this decade. So the other thing to note is these tiny little green bars. They're barely visible over there, aren't they? And those represent the physical market flow for gold in London. And yeah, basically they're pretty minuscule, aren't they? And this is the same story for silver in London as well. Here the bars are slightly different colours, so it's actually these dark coloured bars here that you want to see to represent the futures and options trading volumes for silver. And again, you can see how they've just gone up hugely over time. This chart shows the number of gold contracts traded each month from 2017 to 2019. And in orange, you can see the London's Metal Exchange number of contracts. And you can see it's been dropping steadily since 2017. In blue, you've got the same data, but for the Comex. And that actually saw quite a significant rise up here in 2019. So there seems to be divergence between these two markets. Now, what's the reason for this? I don't really know. If you know, then do put it in the comments there. So how do the three primary centres compare in terms of trading volume? Well, I couldn't find a chart for that because that would be nice to show how it's changed over time. But I did manage to get the figures just for 2020. As we can see here, Comex is the giant here with $54 billion worth of trading volume. The two exchanges on the Shanghai exchange account for $12 billion altogether. And interestingly, the London Metal Exchange is tiny at only $160 million. So it seems that London is playing a smaller and smaller role in the gold market. Next, let's look at how much physical metal is being withdrawn. So the top half of this chart here shows the cumulative withdrawals for the Shanghai Gold Exchange. And in total, over the past 10 years, over 18,000 tonnes of gold have been delivered. That's more than twice that held by the Federal Reserve. The bottom part shows the monthly withdrawals, and you can see that that steadily rose right up into 2015, and since then it's kind of plateaued really, hasn't it? Silver is also being withdrawn, and there were particularly high rates of physical silver withdrawal in 2016 and in late 2020. Let's move on to the Comex and look at the stocks of physical gold held. Now in orange here, this is the registered gold, and that's the gold that's fully available for delivery to investors with long positions who stand for bullion delivery. In blue is the eligible gold category, which just means that the gold that meets the exchange's requirements is there, but it's not necessarily available for delivery. Well, as you can see here, it's pretty obvious. Something very, very strange happened over here in 2020. Both of those categories increased rapidly and substantially. What was going on there? Does anyone know? The picture does look a little bit different for silver. So in 2020, yeah, there was a rise here and here, but I mean, both of these have been rising over time anyway. Okay, so the gold held by the Comex increased. What happened to the deliveries? Well, as you can see here, since 2019, deliveries have skyrocketed. Look at that. And I was just looking at this chart, and interestingly, if you look at where the gold price has corrected, so we've got a correction here, and you can see that the deliveries dropped substantially over there. Again, we had a drop in the gold price here, and again, deliveries dropped throughout that time. So the interesting thing is here, when the gold price seems to be correcting, deliveries have shot up, which seems to be something different to what happened previously. Well, I guess if we look here, the gold price had corrected down here like this, but over that time, the gold price went up. Anyway, just an observation there. If we look at the open interest and cumulative deliveries since 2019, we can see that the deliveries in the Comex are taking up increasing proportions of trading. So here, back in very early 2019, hardly anyone stood for delivery over here. It's tiny. And this is widening substantially over here. In 2020, so that's over here, the Comex delivered 782 tonnes of gold. And as you can see, and as we saw in the previous chart as well, this is a record level. But it's still less than half of that traded on the Shanghai Gold Exchange in a year. We have the same story for silver with a record 290 million ounces. Sorry, now I don't have the up-to-date version of this chart, which only goes up to 2015, but it does give you an idea of the historic relative physical gold throughput in China versus USA. And so in red is the Shanghai Gold Exchange withdrawals, and in blue is the Comex deliveries. And at the moment, the Comex deliveries are around here. If you remember, it was about 782 tonnes, so it would be around here. So overall, my impression from all of this is that the Comex is predominantly paper gold, while the Shanghai exchanges are predominantly physical. Trends appear to be changing in both markets though. So on the Comex, the physical deliveries are certainly increasing. But what changes are happening on the Shanghai exchanges? On the 31st of October, the Bank of China set limits on paper precious metals positions. Paper gold cannot be bought beyond the position limit, but existing paper positions can be sold. Now, apparently, they also stated that paper gold and silver transactions will eventually be cancelled. Now, this seems like a pretty big deal to me, and my interpretation of this is that they're funneling people away from paper towards physical gold. That might cause a divergence between China's physical gold price and the global spot price. Now, if you think about it, if that occurs, then arbitrators will end up buying physical gold from the West and selling it in the East. It might be that the goal of the Shanghai Gold Exchange is to facilitate physical gold ownership, while the Shanghai Futures Exchange might be aiming to influence the international spot price of gold. Look, that's just my speculation there. In conclusion, I think there's a huge amount of opacity around how gold is managed, and all we can do is speculate. Gold is a very, very important strategic asset, and the various entities in the gold market each have their own goals and interests. Often what's being said and what's being done are two very different things. As with most things these days, I think the number one consideration is which snout is in which trough. Now more than ever, there are a lot of snouts in a lot of troughs. When it comes to finances, I think that the East and the West are following very, very different paths. To those who understand sound money, stacking gold seems prudent. Now, surely the leaders in the Western financial system know this. So why on earth would some countries hold zero gold in their reserves? Well, there are a couple of possible explanations. You might be able to think of some others, but one is that those in charge have more to gain for themselves by pursuing a flawed fiat system. Either that or they're suffering from fiat brain syndrome, which I've described in previous videos. Anyway, in so many ways, I'm seeing the Western world hitting the self-destruct button. It's just self-sabotaging, and it's very sad to see. Anyway, going back to the original question, is paper gold on its way out? There are some suggestions from what I've shown you that it could well be on the way out in China. But as for the Comex, I can't see much sign that it's disappearing, and it certainly won't go down without kicking and screaming. Next up, the market update. Let's start with the US dollar index. So this is the DXY on the daily scale. And last time when price was around here, we were talking about how I thought price would try and go back up here, which it has, and it actually made a new high above this level. But you can see that it got rejected quite firmly. So we've got this long upper wick and it's coming back down again. So where's this going? Now, of course, this red line is that very long-term line of resistance, which I've drawn it on the monthly scale. You can look back at some of my previous videos about that one if you haven't seen that. But notice how price just poked above it, but didn't quite make it. This time it's made more of an effort to get above it. I actually don't think it's going to stay above it in a sustained way. I think this thing's coming down, and I think if that is the case, and if we come below 93.70, let's say, around here, if we break this line over here, this is going to tank. So yeah, I think we've still got a little bit of time before that happens. But yeah, this is an important resistance line here, and that rejection possibly means that if we get follow through, I think it might come down. Anyway, who knows? Who knows? This was an interesting chart that I found. This is actually from Patrick Kareem from Bad Charts, and he tweeted this one out, and I just thought it was really interesting. And thanks to those viewers who actually directed me towards his work. I think he's really interesting because he's very creative and he comes up with things that most people don't really think of. So this is one of them. So what he's done, he's charted the US dollar index 6-year moving average. And what I like about him is that he does look at very long-term charts here. So this is the US dollar index going back to the early 1970s over here. To current time here, and as well as that, he's drawn these 16-year cycles here, which I thought was quite interesting as well, because as you can see, the cycle dips seem to line up pretty well, actually, don't they? And so do the peaks. Now, of course, the peaks aren't exactly at the peak of this thing here. These things are never perfect, remember. I don't think any indicator works 100% perfectly. And with these cycle ones, what I can see here, they tend to peak a little bit before this cycle time peaks here. And, you know, we're just before that peak over here as well. So that would suggest a potential down move coming next as well. Interesting. I quite like that one. Okay, so let's move on to gold priced in US dollars on the daily scale. And hooray, at least I don't have to say that the price is the same as it was last week. Yeah, I've been saying that for the last 2-3 weeks here as we were stuck in this range over here. And we had a lovely green candle coming up. So that was a nice change, wasn't it? Anyway, now, of course, we're still not out of the woods. Yeah, of course. But what we're heading into this area over here. So remember, price just didn't like this area over here, which is kind of in the high 1830s. And we've also got this resistance coming from this longer term downwards trend line. So I think if we can get above 1840, then things are going to look very, very promising. But that is the hurdle here around, let's say, the high 1830s over here. That's what we need to get to. So look, it's still early days. Don't get overly excited. But yeah, I don't know. I quite like this. The other thing is, as we were talking about last week, I was suspecting a little bit more downside before turning around and moving up, which is what we got. And 1760 was the maximum downside there that we saw, and price just reversed pretty quickly actually. And that's because we had all the support over here, but also if you look previously, roughly that level there was support there as well. So what happens if we get here and it doesn't like it and it gets rejected. Well, I think the downside is kind of defined by this upsloping trend line, really. I think if we go below that, we're going to start looking pretty bearish below that. But no, I'm still looking for more upside here. Okay, in silver, similar story. So price went up here, it dipped back down again, and it got rejected from that 23 again. We've got this long wick, lower wick here, and price has been moving up. We got very good follow through there as well. So here, the kind of high 24s is going to be the next hurdle. If we get above that, and if we get above that quite quickly, then potentially what we're looking at is a kind of inverse head and shoulders here, which would give us a target of coming back up to that 28 level, that notorious 28, which is a big hurdle that we're going to, but we've hit that quite a few times in the past year. And so I think if it goes for it, I would expect that to crack. Now, I mean, what might happen is it might crack through and come back down again, but I think it would kind of make more of an effort to stay above there, just because it's had a go at it for so many times. But look, that's just my hunch anyway. Okay, so yeah, so we're looking for, let's say, 2480. We need to exceed that peak really as the next step over here. And I thought we'd look at the gold silver ratio. I don't look at it that much. I tend to prefer looking at it when it's at its extremes, which it's not great for short-term trading, but look, let's have a look at it anyway. I thought it was quite interesting because we've got this little pattern here, and I got a feeling this little thing wants to break down here, in which case that's going to be good for silver and for gold as well. And of course, potentially we could have a head and shoulders here, and there's the neckline over here, in which case we're looking for targets in the low 60s there if that does play out. And next we have the gold miners GDX, and this is what's been happening since last August here. And more recently what happened was we had this move up, and that made a higher high here compared to this high. Okay, so okay, look, I know it's short term, and we also made what appears to be a higher low. Now look, it's still early days to say that, because of course this could just turn around and come back down all the way down here, but I don't know. I still think this has got upside here. The great thing is that we were talking about this little gap over here, and that did in fact close, and now price moved up to close this gap which was above it, and we've got plenty of gaps above that still need to be filled. This one wasn't completely filled, and we've got this one, we've got one over here, and yeah, that's it for now. Oh, and there's one massive one over here as well, actually. So again, we're getting that similar kind of feel to it over here, haven't we? There we go. So what we're looking for is a break above 34 to confirm that pattern there. And of course, what we really want is a break above 37 there. I think price could really get moving above that point there. Now, below here, I've done the distance from the 200-day moving average, and I've joined the peak, which is over here. It's kind of hidden by those numbers there, but and I've joined it to the peak over here. And what you can see at this point here, which is around here in terms of price, this broke above that trend line there. So the big question is, was that an early sign of a break of this downwards pattern here? Are we is the momentum moving to the upside here? So yeah, that's going to be interesting. Next we have the junior miners. This is the SILJ on the daily scale, and similar story. We've got this pattern here. Now, interestingly, although price dropped here, didn't fill that gap there. Now, it doesn't necessarily have to fill the gap. Question is it going to now? Because obviously price tried and it just reversed. But yeah, I think we need really to get above that 14 level at this point. And again, if we can get above that 14 level, we're heading for that major trend line, which we've drawn on the monthly scale up here. And that's the big one that we really want to get to. But look, let's not get too far ahead of ourselves. It's still early days yet. And again, that distance from the 200-day moving average. So again, we've joined the peak here and the peak over here. Now, we haven't broken out on this one yet, but we're pretty close. So the breakout will be over here. There we go. And price is over here. So it's just below it, but it's getting close there. So that's going to be interesting to see whether we get rejected at that point or if we blast through there. And I thought we'd end, we had a few people asking about whether my viewership tracks the gold price. And I kind of thought it was doing that intuitively. You know, when gold price was going up, it kind of felt like I was getting more viewers per video. But I thought, no, look, we need to really look at this a bit more objectively. So I've got the gold price chart here on the weekly scale, and here I've got the weekly viewers. So for each video over the weeks here since I started back in September 2019. And it's interesting because when I started, of course, it was pretty flat, which you'd expect, but it started doing really well. And in April, you can see I've got this massive peak here. But of course, that only coincided with the gold price kind of being over here. So it hadn't risen massively, had it really? And then the gold price shot up here, but my viewership actually dropped. I mean, maybe that was an anomaly. So maybe if we just got rid of that, okay, let's just say that's an anomaly, in which case I guess you could say you've got a slight rise there, maybe. And I guess since then it's come down. Maybe if we exclude that, then yeah, maybe it is following the gold price. But again, you know, it doesn't really fit with some of these things here. So we've got a big drop here. And yeah, maybe we've just got a bit of a drop here. But I don't know, to me, this just looks like it's all moving sideways. And in fact, it's kind of tanking now, isn't it? Oh dear, oh dear. Anyway, congratulations to those of you who have managed to stick with it and stay here on this channel. Thanks for listening to me. I do hope you are finding it useful. I hope this isn't a reflection of the quality of the videos. Maybe there's an inverse correlation. Who knows? Who knows? Anyway, I just thought that was interesting. And of course, we had the 5th of November the other day, and in the UK, people celebrate that big time. So that's Guy Fawkes night, and people usually have massive firework parties and bonfire nights and so on, with lots of food and marshmallows and so on. But here it was a bit of a fizzler, really. There were hardly any fireworks compared to normal. So yeah, it was a bit miserable, really. And of course, many of you might know the story of Guy Fawkes. Anyway, now just to mention also, I'm also available on Odysee. Now, Odysee is a platform that's similar to YouTube, except it's a decentralized platform. And it's completely free for you to join on there, and you can watch these videos without any ads, and you can still comment, and I've managed to work out how to reply to the comments. So I'll put the link in the description if you're interested, and you also get rewards for viewing any video on the platform as well. So check it out if you're interested. Anyway, if you did like this video, then feed the algorithm on this channel. So you can do that by pressing the like button, subscribing, and commenting, of course. I always like hearing from you. Anyway, that's it from me. See you next week. Bye.